have dealt with investors in New York and Nasik, Tokyo and Tarapur. It is same question. Mantri ji gold में डालना चाहिए कि silver में डालना चाहिए. So people chase immediate fast return and that perhaps is the best way of investing.
Mr. Vijai Mantri sir, you are one of the person who's been at the foundation of the mutual fund industry. You were the CEO at HDFC Mutual Fund and PGIM Mutual Fund. What is exceptional returns according to you?
I think 12 to 15% is what you should target in my opinion.
But 12 to Nifty 50 only will give, no?
Going forward,
Will not give.
Let's see. You do 1 lakh rupees SI. You compound 12% for 20 years. From a 21st year, you can take out 8 lakh rupees per month for next 40 years and your wealth will not deplete. India will remain the land of alpha. If you look at 2005, total packaged food consumption was $0.9 billion. In 2019, that has become $37 billion. You buy Zomato, Swiggy, but that is what most people will do. But what I would look at, the best sector to invest is. When I go and meet client, people tell me, Vijay, to fund manager chala rahe hai, speculator is running this, share market is this. I'm hearing this same story when Nifty was 1,000 point.
Mr. Vijay Mantri sir, you are literally, one of the person who's been at the foundation of the mutual fund industry. So thank you so much for coming here. My first question to you, sir, is who should get a financial advisor? Is there like a stage in life after which I should be like, I need a financial advisor?
So first of all, it's real pleasure and honor to be with you because I believe you are one of the most leading influencer or a person who's dealing with personal finance, and your team has done a fantastic job of educating millions of investors. So my experiences could be a liability, but dealing with people like you, we learn lots of things. So the question is, who would need advice is as simple as that. Who would need good health advice? Athlete would need, a obese person would need. Depend on your situation. Everybody need a good advice. And I can tell you for my 30 years of experience, I dealt with somebody who's earning 5,000 rupees and I dealt with somebody who's 5,000 crore of AUM. Ultimately, the person who take a decision is a human being and everybody made a mistake in their life. There's no single person I have met in the investing journey who's not made mistake. So if you are really smart, you learn from other people's mistake. Or if you're really smart, then you make mistake. If you're not smart, you make mistake and again keep repeating. But once you're really smart, then you figure out you made a mistake, what are the lessons I learned and do I need to take help of somebody to manage my money? And also need to understand that all of us have a limited cognitive abilities. So whether I look at enhancing my career, whether I need to look at taking care of my health or our family, I can't do everything. There are certain set of people who are extraordinarily brilliant, but they can't be brilliant at all the things in life. So wherever you see that you are not good enough, for whatever reason, there's no shame in taking help of expert, whether it's medical, health, career, whatever. We do take help. So that is my submission that perhaps everybody would need a little bit of help in managing money.
So after working in this industry for more than 30 years, you've seen all kinds of investors. You've seen all kinds of mistakes that people are making. So can you sort of share what are the biggest mistakes that you're seeing that young investors are making today?
Not only young, actually everybody. Yesterday, 2 days back, I was with the 80-year-old person. Okay, he's seen everything. And same thing, Mantri ji gold में डालना चाहिए कि silver में डालना चाहिए. So a recency bias. So people chase across the globe. I have dealt with investors in New York and Nasik, Tokyo and Tarapur. It is same question. People chase immediate past return and that perhaps is the worst way of investing.
Yes.
And will people keep making the same mistake? People will not change.
Okay.
So exactly as I told you, we know everything. What is needed what needed to be done to stay healthy? Everybody knows the answer. Okay. But ultimately, what will you order in the evening? Samosa and vada pav.
Yeah.
So this,
Right.
So staying this, and it's very funny. Someone told me that making money is very simple. What is required is discipline. But he told me something very profound. He said the part of the brain which is responsible for discipline, the same part of the brain which feel the pain. So staying disciplined feel like we are going through a painful process. And that is the reason people find the easy way out. And our job is to simply ask people to stay disciplined, but we make it a little more meaningful, interesting, conversational with people. So, they stay on the course. So if you ask me what is my edge is behavioral. That anybody comes to me will stay longer. And if you stay longer, you'll make money.
So one is recency bias. What other mistakes do investors make?
And then it's very funny that India is a very funny society where everybody is expert in everything else except their own work. So you go in the morning walk, friends will tell you something, evening mein kuch aapko bol dega, colleague will say something, and we get guided by those people who have no stake in the way money has to be managed.
Yes.
So take reference, but ultimately you need to manage your money through expert help. So this is a challenge I've seen. People listen to too many voices and then end up confusing themselves in the whole process. So these mistakes get repeated. There are many mistakes people make but these are two fundamental mistakes, that quality of advice is not available. And second is that recency bias is huge. So you don't touch a asset which is not done well. People are talking about gold today. What happened 3 years back? Nobody is talking about gold. Why? Why people are talking about gold today? Because gold is deliver return. So this is the way the world money is managed. And I don't know whether you've seen this report by JP Morgan. They looked at 20-year data of US market. They looked at every asset category, S&P 500, bond, gold, everything. And then looked at return of investor. By investing all these asset category, returns of the investor was the bottom. Because they kept investing at the top of the market cycle in every asset category, not at the bottom of the market cycle.
Okay.
So I have done a study when I was with HDFC Mutual Fund. It's very funny. The fund's returns and investors' returns are two different things. So I have done a study with HDFC Mutual Fund. One of the fund was delivering some 18-19% CAGR. But the investor in that fund had a single-digit return.
Wow.
Yeah.
How is this possible?
So what happened? The fund was 100 crore, delivered 30% CAGR. Fund became 500 crore, delivered 20% CAGR. Fund became 2,000 crore, delivered 20% CAGR. Then 3,000 crore more came and the fund went down 50%, 30%, 40%. So if I look at aggregate return of the investor in that fund.
Wait. Then the fund went down.
Of course, because 2008 crisis came. Market went down 60%.
Right.
So at 100 crore made 30%. 500 crore made, say 20-30%. But 3,000 crore went down. So this is the classical things which keep repeating time and again in the market.
I think this is the right segue to go into how to pick the right mutual funds.
Yes.
Now, there are about 4,000 plus different schemes right, in the market today.
Yeah.
So, what is your way of picking the best performing mutual funds? And maybe we can start off with understanding, okay, there are maybe 50 different categories. Out of these 50 different categories, how much do I need?
So I simplify for your viewers, but actual life is not as simple as trying to simplify. So first what I do is that you must have heard from people saying the winners keep rotating. Now, moment I say that, I am taking my investor into uncharted territory. Okay, winners keep rotating. Then what?
Yeah.
What is the solution? Which is going to be the future laggard or which is going to be the future winner? That is the most important thing for me to communicate to the investor. So I looked at fund houses. So out of 45, 48 fund houses, I already picked 20, 25 where I see the team is good, the size is decent. Even somebody leave, they have the ability to hire new fund manager. So I have already chosen 20, 25 fund houses.
So AMCs you've already shortlisted.
Already shortlisted. And then new AMC keep coming, like Abacus has come, Helios come, White Oak come, because I know the fund manager very well. So I know what is their track record. These are not the name people need to go and market. I'm just making a point. So then I look at the scheme of these fund houses and then I say, if winners rotate, then what is a top category right now? Or somebody who's topping the chart right now. After a certain point of time, they will stop outperforming and they will go down. And there's a finite time in which the fund outperform, 3 years, 4 years, 5 years. So I looked at the data of the best performing fund, how long they stay in the top quartile. And then there's a tipping point comes where now the performance start going down. So I looked at the point where we believe that now the fund is topping the chart for a pretty long period of time. stop giving new allocation to that fund, and start looking the fund which has underperformed, fund from the great fund house, great fund manager, but underperform for 2 to 3 years. We have a time period we decide on, and then we start giving allocation to that fund. So one of the most popular fund on social media, I'm not taking the name of the fund. We stopped recommending that fund 3 years back. And perhaps there's a time now we'll start recommending that fund again. Because the fund was topping the charts 2 years back. And now the fund is underperformed. And now perhaps we'll pick that fund. So that is the one part. So it is very counterintuitive. Suppose I'm telling you a fund which is delivered 20% CAGR. And the other fund was delivered 12% CAGR. And I'm telling my investor to go for 12% CAGR. What will be his reaction? You may be getting more commission here. Okay, that is a normal mindset. So this is the one part. The second part, then I look at which category I should be recommending. Large cap, flexi, multi, small, or thematic. I'm a big fan of thematic funds. And there what we have done is very simple metrics that India GDP has grown 12 to 13%, 14% for last 10, 15, 20 years. If a fund category delivers 17, 18% or more than that, then we say that fund has start topping it. That category start topping it. So, for instance, 2020, when I have no clue about IT industry, but we took a call because in 2021, the 10-year return of Indian IT fund was 22 to 25%. We said this is not sustainable. I had no clue what will happen in future, whether AI will come or no clue. Similarly, in year 2000, we looked at PSU equity fund. 10-year return was an absolute negative. We start picking those funds. Pharmaceutical. So we look at where the category average return has been substantially higher than India's nominal GDP growth or substantially higher than the corporate profit growth of India. Then we say this segment has peaked. And we start looking at segment where the last 5-10 year return has been suboptimal, because ultimately winners will keep rotating, the sector will keep rotating. So not necessarily you have to be contrarian for the sake of being contrarian. You just figure out, first of all, where the profit pool is moving.
What do you mean by that?
Which sector of the economy is going to be more profitable? And
how do we predict that?
Not very difficult, actually.
Okay.
You need to do some work and you'll figure out. The most important thing to see where people are spending their money. So let's look at FMCGs. Let's look at, for instance, cement and steel and building material company. It's very fascinating story. India built lots of houses. The first thing you need to build house is cement and steel. But cement and steel company has not delivered return in last 20 years. Effective. Very less. But building material company like wire company, switches company, plywood company, these company has given 50 to 100 times growth in their market cap. Because what has happened, once you build a house, the number of electric connection you have in house, number of plywood, all kind of material use, the cost of interior has shot up substantially. So consumption is happening in this segment of the market. Same thing you look at FMCG, the way cosmetics are being consumed. It is no longer through distribution channel, through celebrity endorsement. You figure out where the young people are actually going and spending their money. You look at how people are spending in the holidays. You look at hotel rates. So it is, you need to keep you look at high frequency macro data. And then you read a lot of material given by the fund house. So you'll figure out that where the profit pool is moving. It's not very difficult actually. But you need to have at least 3 to 4 hours reading habit every day.
So what do you read every day, 3-4 hours?
So I follow certain great macro guys and 2-3 source material. One is that India's economic survey. It is fascinating, if anybody is interested in understanding India, there's RBI's financial stability report and second economic survey. If you read economic survey, you got such wonderful insight about what is happening in Indian economy.
And this is published how frequently?
Yeah, economic surveys come just few days before the budget. This time it came on 29th January or 30th January, just few days before the budget.
It comes once a year?
Once a year, and RBI stability report came in December end. When you read that survey, it talks about obesity among men and women is going up.
It says all that.
It gives the complete breakup of Indian thali, how Indians are consuming. So it's very fascinating data. If you look at 2005, total packaged food consumption was $0.9 billion. In 2019, that has become $37 billion. So from 0.9 to $37 billion. What is the first level of second level effect of these things? The first level is that you buy Zomato, Swiggy, but that is what most people will do. But what I would look at the best sector to invest is healthcare then.
The second order effect.
One very fascinating report I was looking at 20-year CAGR in dollar term across like Japan, USA, New Zealand, various countries. And what I found is very interesting. Look at the Japanese market. The Japanese stock market delivered 160% return in dollar term. But the company which run the stock exchange delivered 20 times return. Look at BSE, which got listed in 2017. I think at 2017, Sensex was maybe 17,000 or 20,000, I don't remember. From that, the Sensex has gone up 4 times, 5 times. But BSE stock has gone up 28 times.
Why is that? What is the rationale for that?
Rationale is that people will do transaction. People will speculate. Okay? That is not going to stop.
So you're saying platform companies will do well.
Platform company. And I'm just saying that you keep your eyes open. So you see
That's what you're
data today.
observing.
You see data today. If data keep changing, you change your opinion. So the first is that I look at which sector to invest, which factor to invest, mid cap, small cap, large cap, and then which theme to look at investing. And then how go about investing in that segment or the sector. That is a call we take.
So generally, have you observed that AMCs which have larger AUMs, they're not really that hungry to look for alpha because they want to preserve capital more than
No, that is, I wish it was true, but it's not. My reading or my assessment is a little different.
Okay. The reason I say that is because when you are managing, let's say 1 lakh crore, how will I allocate all of that money unless I don't go for the large established companies where I go overweight on the large established companies? And you're saying that more than half of the companies on Nifty 50 will be finding it a struggle to outperform.
Yes.
So if I'm managing 1 lakh crore, most of my money will go into large cap, no?
So agree with you. So you must be meeting a lot of mutual fund CEOs and CIOs and all that. What is the conversation like? Asset allocation, Gift City, AIF, right advice and all that. What is the essence of asset management company to generate alpha? Why there's a very little talk on generating alpha?
Because it's tough?
No, it is not tough. I tell you why. Today, mutual fund industry gets 3 lakh to 6 lakh crore rupees every year.
Right.
I am a fund manager. I have a CIO above me. I have a CEO above me. I have a board member above me. And certain companies are listed. I can only outperform when I have ability to underperform. When I take active bets, there's a possibility that I'll underperform. I can underperform for 3 months, 6 months, 9 months. And during that period, there are lots of money coming and I'm not able to get that money. There'll be question mark. Okay. Or I was just looking at the data. Just I think 6 months back. And then in Nifty 50, number 1 performing stock was Sharan Finance. Right now, even today, 1 year performance, Sharan is number 2 after BEL. And HDFC Bank was struggling. Suppose I am overweight on Sharan Finance and Sharan Finance doesn't deliver. My CEO will ask me, what is wrong with you, Mr. Mantri? But suppose I'm long on HDFC Bank and HDFC Bank doesn't perform. My CEO will tell what is wrong with HDFC Bank. And this is a reality of life, Sharan. You know, the fund manager compensation has increased substantially.
I've always wondered, how much do fund managers get paid?
I think a decent fund manager will get a close to $1 million, $500,000 to $1 million. Total compensation, including bonus, ESOPs.
So they could make anywhere up to 10 crores a year.
Possibly, yeah. So in a career of 20, 30 years, a fund manager will make 200, 300 crore, including ESOPs and everything.
Wow.
Yeah, it's possible. In India, we have fund manager made that.
Fund managers in their whole life will make 200 crores.
Yeah, easy. It's ESOPs. Hai.
Wow.
We have people who has made that kind of money.
Wow.
There's no surprise at all. So in this given situation today, I can say, Sharan, with confidence that a very good advisor can outperform 90% of the fund managers because I could pick right theme. So risk management has become so, overburdening some way. So for instance, suppose today I'm liking pharmaceutical and pharmaceutical weightage is 6%. My compliance officer will not allow me to go more than 8%, 9%.
Why?
Because there's a risk matrix. You can't, take this kind of position.
Because they want to control the drawdowns.
Exactly. Suppose the call go wrong, then what happens? So this is what we say process-driven organization. So nothing wrong with that. I'm saying they will deliver a decent performance. But if you really want to make decent money in India, because India will remain the land of alpha. No question about it. And I give some statistics to you. I think this was done by 360 AMC. 360 AMC has done this research.
The 361 wealth.
361 AMC, not wealth. So they looked at 20% CAGR rolling return basis. So out of Nifty 500 in India, 155 stock delivered more than 20% CAGR for a 20-year period. 155 stock. Now that data for USA was 35 stocks. That data for China was 7 stock. That data for Japan was 2 stock. And even if you see this rally in the market, all global companies, very fascinating data. And if you read economic survey, it captures that. It looked at Korea, USA. So in USA, more than 50% of the return of US market came from 7 stocks.
Okay.
China's more than 50% came from 5 stocks. Korea, it came from 2 stocks.
Samsung.
And Hinks. And Taiwan 1 stock only. Okay. So this is the kind of, and all of them are related to chip, semiconductor, AI story. In India, if you look at Nifty 50, which deliver 10% return, out of 50, 28 stock deliver more than 10%, and they come from all segments of the economy. They were FMCG, they were auto loan company, they were NBFC, sorry, auto company, NBFCs, every kind of companies were there. Okay, so India is a far more diversified kind of market. So I believe that India will remain land of alpha. It is your ability to identify right kind of fund manager, and if you can't identify, then play through themes.
So what is the definition of a good return? Because like you said, the average Nifty has given in the last 20, 30 years is sub 15%,
Not sub 12%.
12%. 12% returns.
That's because for 25 at 12 to 15 is a huge and compounding.
So 12% Nifty 50 has given.
Yeah.
So that that is average returns.
Yeah.
Let's say that's an average investor. They don't need to come to you.
Yes.
If they just put in Nifty 50 index fund, they will get that.
Yeah.
So can you go and tell me what are the levels of good returns from there?
So even, let me answer this question, 12%. 12% return, but what kind of drawdown? That is
The
very
Nifty 50 drawdown has been quite a lot, 30%.
58% in 2008.
In 2008 and 33%, 34% in
34% in COVID. So if I am to deliver 12% to my client and I can do 12% CAGR without going down through 58% journey, then I'm adding value.
Yes.
Or similarly, suppose somebody is willing to take 58% drawdown, then I need to deliver more than 12%. Else he just simply go to Nifty.
Have you met anybody who is willing to take 58% drawdown?
No, nobody's willing to do that, but it happens.
Yeah.
We tell people this happened. So it's very fascinating story. I was associated with HDFC Flexi Cap Fund, and I looked at history of that fund. It's incredible. That fund's NAV goes down 10% every year. 15 to 20% every 2 years. 30% every 4-5 years, and 50% every 8 years.
Really?
Yeah, you plot the NAV of HDFC Flexi Cap. This is the way you create wealth.
Every 8 years, there could be a drawdown of 50%.
This happened in the company's NAV started in 94 at 10 rupees. By end 95, the NAV was 95, 1st January 95. By end 96, it was rupees 485. Then it went up to 28, 29 rupees in 2000. It came to 2001 below 14 rupees. In 2008, it went to 220 rupees. It came to 91, 92 rupees in 2008 crisis. So it kept happening.
So let us look at what is exceptional returns according to you. What do you sort of try to achieve when you give advice?
It's very, very funny. Once in a 10, 12 years, we get fantastic opportunity. Like in 2021, we took a call on PSUs, and it worked like magic. But these kind of opportunity don't come every year. And these kind of opportunity, when I started in PSU fund, I looked at, okay, I'll make 50%, but deliver 200% return. So, but I not targeted 200% return. I targeted कि 2-3 साल में 50% बन जाएगा, but it was a different story altogether. So you need to pick between longevity and multiple. So for a 10-year to grow 5 times, you can achieve in certain phase of your life.
In 10 years to grow 5 times, I need to generate at least 16, 17?
20%.
20%.
20%.
20% CAGR will be
18-20%. You can 10-year, you can grow your wealth. But these kind of things will happen through, by sheer accident or sheer, some brilliance. But it cannot be repeated.
Oh, you're saying it's like 17-18% is not repeatable?
Not at all. You can't have that kind of consistent. You had historically, but going forward, you'll not have that kind of the fund deliver. Like in India, we have a 30-year average of 17-18% CAGR. That is history, because at that time interest rate was also 12-14%.
Yeah.
So I don't think that will get repeated in India.
So what is the realistic return?
I think 12-15% is what you should target, in my opinion.
But 12 to Nifty 50 only will give, no?
Going forward,
will not give.
Let's see.
What do you mean by that? Let's see.
Because you have 50% of Nifty 50 is being, look at what it is, FMCG, IT, bank, 35 to 37% bank, 12% FMCG, 8% IT industry. So 50% plus is the kind of industries where we don't see big growth coming, very honest.
So you're saying 12 to 15% returns average is what you should target for.
We should, and more importantly, should look at longevity. How long we can compound even 12%. That is the most difficult task. Longevity is the most difficult task.
But if you ask the average, let's say 25-year-old person today, and if you tell this person 12% returns is what I can help you, they will not want to take the help, right? They'll be like, I don't need your help for 12%. So what answer would you give them?
So they are old driver and they are bold driver. But you will not find old driver who's bold.
Okay.
If you're a bold driver, you will not remain old.
Okay.
You will die young.
Interesting.
Investing journey, longevity is the most underrated thing. The most underrated thing is that, can I compound 12% for 20 years? If you compound 12% for 20 years, you do 1 lakh rupees SIP. You compound 12% for 20 years. From a 21st year, you can take out 8 lakh rupees per month for next 40 years and your wealth will not deplete. But people don't understand the power of longevity. We are so much focusing on 20%. If somebody tell me I can generate 25% CAGR, okay? I ask them, who in your opinion is the greatest fund manager on the earth? Give me 3 names and look at their 20-30 year CAGR. What is the possibility of beating them? But I believe I can do better than that. So I look at Virat Kohli playing fast bowler, 140-150 kilometer, and I see what Virat Kohli got. He got a bat, he got a helmet, he got guard, everything. I can buy everything from the market. So I get selected onto IPL, no experience of playing cricket, but I watch Virat Kohli. Now suppose somebody's Shenmon is coming at 150 km per hour, bowling to me. I got everything what Virat Kohli got. What will happen to me on first ball?
Probably go to the hospital.
Exactly. If I'm lucky, I get out. So that is people don't understand these things. Okay.
So let's keep equity aside. So equity is a beast by itself.
Yeah.
And you're saying future expectations should be kept at 12 to 15%. But when you mix multiple assets and try to rebalance the portfolio in a very strategic manner, for example, gold has doubled and tripled. We've seen these kind of returns. So when you mix multiple asset classes and move money and rotate capital from equity to gold to debt, can't I expect to get higher than 15% returns?
Not possible. Try doing it. Because what happens is that today we're talking about multi-asset because the gold has done very well.
Yeah.
Else we'll not be talking about it. Okay. So there was a period where gold has not done anything. Even in recent past, from 2011 to 2017-18, for a 7-year period, gold does not deliver any return. What would you do as an investor?
Take out my money.
Exactly. When you should be investing in gold when 10-year returns are less than 10%. But it can remain there for a couple of years again. So to deliver 15-16% consistently is impossible.
No, I'm not saying just with gold. I'm just saying when you have a proper balanced portfolio, let us say, for example, 60% equity, 30% gold, 10% debt. And I take strategic calls in between in terms of where do I go overweight and underweight, depending on geopolitical and macroeconomic issues. And even within my equity, I sort of do that sectoral rotation. So if I do this, can't I hope to get 18-20% returns?
Looks very difficult to me.
Okay.
The biggest delta would always come from equities. But what you can do is you can reduce your drawdown by going strategically where you see the market is topping up based on certain data point. Definitely at that time you can reduce equity exposure.
Okay.
Similarly, in the gold, when you look at data where 10-year returns are 7%, 8%, you can go long on gold. And when you see gold returns in excess of 17, 18% for a 15-year plus, 15% plus over a 10-year period, that is the time you should start reducing the gold exposure. But it is easier said than done.
Interesting. So, right now as we speak, how much should be in large cap, mid cap, small cap?
So, currently you should be looking at approximately approximately 40% should go into flexi cap.
40%.
40 to 50% go into flexi cap. Some 20% should go into large cap. And mid and small cap, suppose you're doing, don't do a one-time allocation. Even in large cap and flexi cap, don't do one-time allocation. You do 6 to 12 month STP.
From arbitrage fund.
From arbitrage, liquid, what depend on your and they are investors who are extremely concerned about news flows. So for those people, I give very simple solution that you put money into a debt fund or equity arbitrage fund and just transfer the gain into equity mutual fund. Okay. So what is happening? Your principal is by and large on the less riskier asset category, and the gain transfer makes your wealth journey a little easier for you to digest. But you should participate in the market. Even I'll tell you something very interesting. People give illustration of कि ये तो 92 जैसा market है, 2008 जैसा market है. Nothing like that. I'll give some number to you. A big drop in the market happened after a big rise. So in 1992, market fell more than 50% and came to the same level where it never went back after 11 years. So from 1992 till 2003, you haven't made money effectively. That was 11-year period. But you know what was the return in 1992? Last 10-year return? Sensex level? 21 time. 21 time.
In 10 years?
In 10 years time. Sensex level, not a stock level. So when you've seen this kind of rise, then you have seen this kind of fall. Now look at 2008. Again, market fell from approximately 50% and it took 73 months for the market to come back to the same level.
5 years?
7 years, 6 year, 1 month.
It took 6 years to come back to same level.
January 2008, Nifty crossed 6,000.
Okay.
Okay. It came back to the same level in Feb 2014.
Wow.
Okay. 73 months. But what is most fascinating, when you look at January 2008 and look at last 10 years CAGR of all equity mutual fund, all diversified equity mutual fund, 10-year numbers was, in 10 years the NAV went up 21 times. In 5 year NAV went up 8 times. In September 2024, the best performed mutual fund NAV went up for a 10-year only 6-7 times. That is small cap indices. Rest of Nifty delivered 4 times growth only, which is equal to India's GDP number.
So we're not frothy, right?
Not. I consistently said that I don't see big correction happening in this market. You will not make money, it's a different issue, but this market is not like market of 92. This market is not like market of 2008 because big drop only happened after big rise, which we have seen in 1992 and 2008.
Okay.
So there are 3 phases to the market: drawdown phase, accumulation phase, and growth phase. Right now we are going through accumulation phase.
And what will come next?
Growth, of course.
So you're saying growth will come again?
Of course. India will grow.
So you're saying now is the right time to do accumulation?
Brilliant time to accumulate.
So you also mentioned about sectoral investing.
Yeah, thematic, not sectoral.
Thematic. Do you see that as part of your satellite portfolio?
Yes, very, very much.
So how does an average investor think about investing? Like how much % should be in core and how much should be in tactical sectoral bets?
See, core in my opinion has to be 80% of the portfolio.
Okay.
And 20% could be thematic, but not sectoral. Because sectoral you need to change. And let me differentiate between people. Unfortunately, MFI also clubs external theme together, but they are very different asset category. So let me explain you. Sector fund, basically the revenue pool come from identical sources. Defense sector, infra sector, IT sector. Okay. Second thing, the number to stock to owns are very limited. Railways, and only few stock become 80%, 85% of the portfolio. Like if you look at IT, 4-5 name is 85% of IT index. Revenue pool is identical. Number of stock to owns are very limited. But when you look at theme, the number of stock to own are very, very big. So for instance, let's look at healthcare. You have diagnostic center, you have a hospital, you have a health insurance company, you have drug manufacturing company, API, all kind of stuff. Similarly, if you look at BFSI, it is just not banks. You have public sector bank, private sector bank, you have payment bank, fintech bank, you have a loan finance company, you have asset management company, entire capital market intermediation. So, and their revenue pool is very different. So, for instance, if you look at capital market, then suppose people are now building more houses than your mortgage company. People are doing more trade than your broking company, and stock exchange is part of your portfolio. So, revenue pool is very different for these companies. And people are getting very scared than going to put money in the bank. So, that is also part of your portfolio. So, theme are very different. So, you need to look at theme from a multi-year perspective. So if I look at theme, for me, total number of people about 60 years in India, certain state like Kerala, 14-15% of population is above 60 years of age. Karnataka, Tamil Nadu. And I think I looked at number around 14-15 crore of India's population above 60 years of age.
Wow.
Now look at diagnostic center.
That's like half of US's population.
Yeah, the number is huge. Now look at diagnostic center. Now, you need a new job. You need a health policy. You need a life policy. You had a fever, has not gone down for four days. What will you do? Number of times you start visiting diagnostic center has gone up. If you go to hospital, the health insurance bill goes up. Equity market is very brutal. It sees opportunity everywhere. If there's a war, it sees opportunity in defense. If it is a pandemic, it sees opportunity in IT company and pharmaceutical. This is the reality of the life. So you see theme. So in my opinion, in India, FMC is pharmaceutical healthcare is a big theme for next 10, 20 years.
When you mean healthcare, you are looking at the whole ecosystem of healthcare.
Whole ecosystem, absolutely.
Diagnostic, hospitals, all of that.
As I told you this, I talk about the packaged food consumption. Okay. And look at, 11% of multi-specialty hospitals, people are from international market. So India will become a international hub for medical tourism. There are many data like for instance, India's population when first crossed 100 crore in 2001, the total number of kids was 40 crore. Now at 145 crore population, number of kids should have become 50-60 crore, but actually 35 crore. Yeah, you see new school enrollments.
It's reducing.
It's reducing. Negative.
Why?
Because बच्चे पैदा नहीं हो रहे भाई.
Oh.
Yeah. So when you see this data, then you see the young kids will have, my kids and next generation will have 1 or 2 kids, maximum 1 or maybe 2. There will be a lot of disposable income. They will not have pressure like us to own houses. So where the money will go?
Where will it go?
Consumption. Not in, how many times you go to shampoo your hair? Just look at this data point, okay? My wife she's a homemaker. She cooks 3 times, breakfast, lunch and dinner. Now both my kids will get married and they will have working spouses. What will happen?
House help will go up.
House help will go up. Second, they'll order outside. Okay? And then see the impact on GDP. My wife get all the dal, chawal, all that. We are vegetarian, so 200 rupees material. So that is 200 rupees goes into GDP. But suppose my kids' spouses order at least twice or thrice in a week. The every meal which costs 200 rupees may cost 800,000 rupees.
Easily.
And it's very fascinating. When more girls start going out, you see the consumption on the footwear, the consumption on makeup item, the consumption on dress material is incredible. So you see these data points. India is changing, man. It's changing incredibly.
So if you had to invest in these themes, one is healthcare,
Yeah.
then other one is consumption.
Yeah.
But consumption may, it's not your, HUL
not
and
FMCG.
FMCG.
Not FMCG.
So how do I pick? This is
So-
premiumization consumption.
So you have tourism, you have air travel, you have even alcohol is a consumption item. You're building material product companies.
But how do I invest in this? Is there like a
Yes,
mutual
consumption
fund for
funds are there. Yeah.
consumption fund is also
Yeah, brilliant consumption funds. Yeah.
this? So what do you think of, the need of like you're talking about, financial planning, right? We're talking about human advisory. Now, with the advent of AI, everybody has the capability to talk to an AI chat and get answers. Now, let's say, for example, until now, or let's say 5 years back, I would go to Google and say, give me best performing stocks, best performing mutual funds. And then that's how I used to invest. Today, I can upload my entire portfolio to AI and say that, tell me what is wrong and tell me what I should buy. So if this is possible, where is the role of a human advisor going forward?
Brilliant question. I just did the same thing and I was sharing with your team. On one of these AI, I asked them to give me top 5 fund to invest at 5:13. They gave me top 5 fund to invest, and with them, I'll show the screenshot to you. And it gave the rationale also. And I asked him, don't give me the rationale, just give me the names only. It gave the 5 funds name after 1 minute at 5:14. But out of these 5 fund, 2 fund got changed. So a lot of people come to me they ask me to give some fund, I give them fund. So now they put on some AI and analyze. So like Sharan is coming to me and saying, Vijay, give me 5 fund. And then I give it. Vijay said, no, Vijay, this is my feedback on this fund. So I asked Sharan, have you used the AI? No, it is. I said, don't tell me. This is a language AI.
Huh.
Okay, AI. I said, okay, now let me type what AI talk about your company.
Okay.
Or anybody coming from any profession, I ask them. Alternatively, I tell them, sir, this is the advice. Now, don't act on this advice, or you don't want to act on this advice. Put 5% of your money and see what happens after 1 month, 3 months, 6 months. So I have a live case. Last year, March, somebody put the entire portfolio on one of the AI. He told them to sell Reliance, exit BFSI. Within 1 month, Reliance was up 27%. And best performing fund was BFSI segment. So if anybody coming with this kind of things, I'll simply say, okay, no problem, sir. Either you keep a track of what this AI is telling you, or you invest 5% with them and 95% with me and see the performance.
But why do you think this AI is not giving the right answer?
No, AI can't be used as a predictive tool.
Why is that? AI, because the entire thesis behind AI is that it will look at past data and try to predict the future.
Yes.
That's the generative model,
Yes,
right?
yes.
So why can't you do it for finance?
So what they will do, they will pick the fund which has done the best in last 5 years.
Yeah.
So again, that is the worst way of investing.
Okay.
And actually, my business will go up if I see more people using AI.
Right. Correct. So, but let's say from the strategy that you mentioned, what if I tell AI that don't tell me the best performing funds, tell me what has been the worst performing funds in the last few years, tell me what are those sectors, and then based on the macroeconomic data of, you said the economic survey report, study that, and based on that, tell me which of these underperforming sectors will rebound for the future. If I put this kind of a prompt, won't it work?
Do it. Let's see what result it gives you.
I think it'll be interesting to see.
See, we see many times what happened in the business of economics or macro, we forget the power of reflexivity. Suppose I'm participating, suppose I come in this room, the temperature is 20 degree. I walk in, the temperature will become 20.1 because my presence create increase in temperature.
Correct.
Similarly, suppose I am participating in economic activity with a given data, my participation will also impact the future data. So the kind of insight I had or kind of certain, unique thing I had will disappear over a period of time. So in the business, in the era of AI, the information is abundance. If the information is abundance, you need to figure out what AI enable rather than what AI does.
No, also I think it's about how well you train the AI, right? I think not everybody knows how to do the right kind of prompting.
I think that's a brilliant thing. Absolutely
Right? Because what I just said is that, like, whatever your insights and knowledge is there, I create a very custom, prompt.
Yeah, absolutely.
And probably, 3-4 lakh people will watch this. But what about the other 150 crore people? Will they go to AI and write this?
Yeah, absolutely.
So I think that is one. And the second one is that I think different people will get different answers, right? And a lot of people might not be able to communicate their risk appetite properly to the AI. And a lot of people end up just blindly copying what other people are doing instead of picking the funds which is right for them. I think that is where the human advisor will come into play. And the last thing is the emotional management, which I think an AI cannot do, at least today.
Absolutely.
Like, for example, when drawdowns are happening, 50% drawdown, will that AI agent tell you it's fine, it's all right, don't withdraw money? I think you will probably not listen into that AI. And I'll probably listen to Vijai Mantri more when that happens. So I think that is the, the relevance of a human being. And it's a good thing because it makes us relevant as human beings.
Of course.
Fantastic. So, Vijay sir, any other last thoughts that you have that you want to share to the audience listening to you for so far? Because I think your entire analysis and interpretation and analysis of macroeconomics has been brilliant. Any last words that you want to share?
So I believe that we genuinely entering a fantastic era as far as India is concerned. And you just don't judge India by any other country. Okay. For instance, just look at auto industry. US is one of the biggest landmass on the earth. Okay. But there's no railway built there. Why? Because the auto industry and airline industry didn't allow it to build. India is not that kind of country. So don't compare India's R&D capitalism the way other countries are or the way it is happening.
That's interesting. You're saying the airline and auto industry of US didn't allow them to build rail.
That's right. Absolutely. As such a big landmass, why there's no railway? It's much cheaper to travel, more comfortable.
So the lobbying didn't allow.
Exactly.
That's
From New York to 4 or 5 hours to go to San Francisco, you can go overnight, no?
Yeah.
Why you need to go 2 hours before the flight to start, and then you airport, and then 8 hours, and you end up spending 8 hours.
Right.
Why you do that?
It's interesting. Didn't really think about
There are many things like that.
And Europe is so good in there.
Europe is so good. So US is controlled by few families, and it's such a brilliant country. Many times we don't appreciate how great this country has been, and so I'll give some illustration to make this point. If you look at landmass, Russia is the biggest country by landmass, but large part is Siberia. Nothing grows there. Canada, again one of the biggest, large part is frozen. Brazil. Brazil's total population's 40% people live in Rio City alone. Look at Australia. Take 6 tax-paying destination. 98-99% population is stay only 6 cities. Look at China. The Hu line divide China. The northwest part, which is Gobi Desert, is I think 54% of the area. Only 6% people live there. The bottom, southeast, 45-46% area, 94% people live. India, every inch is irrigable, every inch is habitable.
Yeah.
And we are not a country, we are a civilization.
I mean, I was just looking at history that I think for 16 out of the 20 last centuries, India was the richest landmass. Right? Just in the last 4 centuries, we lost out. Maybe now it's the time to rebound.
And not only that, when you compare any country who has been like per capita income of 30,000, 40,000, just remember they looted the whole world.
Yeah.
So great place. My only thing to people that don't get carried away with daily news flows. Focus on what the long term this country has done.
Yeah.
So when I go and meet client, people tell me कि Vijay, तो fund manager चला रहे, speculator is running this, LIC का phone आता ministry से, share market is this. I'm hearing this same story when Nifty was 1,000 point.
I think on that note, sir, let's end the conversation. All right, guys, thank you so much for watching till the end. And please feel free to put your own guest recommendations down below. and we will try our level best to bring them on this channel to share their wisdom with you on this candid conversation. On that note, I'll see you in the next one.
Before you go, guys, if this episode gave you even one insight that made you think differently about money, don't just keep it to yourself. Share it with your friend or family member who could use it too. And if it sparked a new thought or even made you disagree with me, drop a comment below and tell me why. Your critique helps me make these conversations sharper and more useful for you. As long as you have me subscribed, I'll make sure that you walk away with at least one new thing every Wednesday.